What's up, you guys? This is Christian for Hustle and Bustle. Last time we talked how you should not buy, or why you should not buy a brand new car, and you should buy used personal vehicle. And there was a little asterisk there that I said that the car is a liability, not an asset. It's a depreciating liability, not an asset, unless it is for business.
So, liability. That means that the item that you just bought will cost you more money in the future and not bring any in return, unless you buy it for business purposes, which is gonna be my next video.
What we're gonna talk about today is why you should buy a brand new vehicle, or it doesn't have to be brand new, it just has to be for business purposes. So I don't know if you heard about the phrase that the rich do not own anything, they just control it. Is it gonna be real estate, vehicle, airplane, jet ski? So the idea behind this is money leverage and liability. For example, I don't own any of the properties that I have, I control them. Now, if I own the whole property, let's say the property is 200K, I can get sued up to $200,000. If I don't own the property, if I own just $30,000, $40,000 out of the property that I control, I can still get the benefits out of the rent. I can still get the benefits of depreciating the property. We're going to talk about real estate more in the future, but basically I can take all the benefits of owning the property without owning actually the property, and I'm just paying debt for the next 30 years or whatever the mortgage contract is. But my liability, instead of $200,000, is, let's say, $50,000, because this is how much I owe. So another thing with vehicles, like a while ago I went to a seminar and the guy really pissed me off, and I really try not to get pissed, but bear with me here. He drove some SUV, expensive SUV, and I'm like, you don't own this, man. Like, I own my car, you know, the MR2, I paid it cash, or the van, I paid it cash. I'm like, yeah, you know, I own my thing. Well, you don't have to own your thing. And he was actually smart. Like, the car that I purchased now, it is for business purposes, and up to $50,000 you can depreciate the car for the next 5 years. Now, don't quote me on this, and I have to do a disclaimer here because I had a conversation with, let's call him a fan, recently, that I'm not trying to convince you guys to do anything that I'm doing. I'm just telling you what I'm doing and what results I'm getting from that. So it was either $40,000 or $50,000. Up to this amount you can purchase a car for business purposes. Now we're going to look at the two different ways you can depreciate a car for business purposes. One way is to depreciate everything about the car. This is the interest that you pay on the vehicle, the purchase price. Let's say you buy it for $50,000. That means for the next 5 years you can depreciate $10,000 each year and minus that as an expense on the business. Again, consult CPA, don't just trust some random guy on the internet. Entertainment purposes only. You know, like your wife before you got married. I really should stop with those wife jokes. So another thing you can write off on your vehicle, this is the one way that we're taking. We're gonna take a look at the other way later, is gas. You can write off tires, rotation, wiper fluid, pretty much all the money you spend on that vehicle that is for business purposes can be written off. So it depends how you want to depreciate it. For example, if you buy a low-end car that is, you know, $3,000, $4,000, $5,000, that's not much to depreciate per year. But if you constantly repair the car and you have to write off that as an expense, then there's an argument that the car needed a lot of repair, so you depreciate it that way. You know, you depreciate the repairs done on the car. If that's the case, I suggest you don't even buy that car that you want to repair over and over and over again. But I mean, it's up to you what you want to do and what route you're going to take. So writing off an expensive car over 5 years, it's, I think, the better approach, but again, it's my just opinion. You don't need to follow it. I just want to stress that enough. I just want to stress that enough. You do not need to follow what I'm suggesting. It's just a suggestion, okay? A recommendation. All of that is just to avoid some stupid comment that I know some of you are thinking of putting down. If you have an expensive car, for example, a car that costs $50,000, you can depreciate $10,000 each year. You can also do an accelerated depreciation the first year, but I'm not gonna go into detail. Just ask your CPA about that. On top of the $10,000 each year that you can depreciate, things that go into more write-offs is interest of the loan, gas, wipers, oil changes, so on and so forth. Now, if you have a lower end car, like my van that I bought for $5,500, I think it's smarter, again it's case by case, but I think it's smarter to depreciate it by mileage. So for each mile driven, the government gives you 59 cents of tax deduction. So if you drive, let's make it 60 cents for easy example. So if you drive 10,000 miles, for example, times 60 cents, the government will allow you to minus $6,000 of your gross taxable income. So here's an argument. If you have an expensive car that costs $50,000 and you're going to depreciate 10K on it, and the car is brand new. And when the car is brand new, like I said in the previous video, maintenance is almost no concern. It's little, slim to none. So if you drive X amount of miles, for example 18 or 20, there's somewhere there is a breaking point that you might want to not depreciate it by price, but you want to depreciate it by mileage because you're going to be driving so much. If you, however, drive little, let's say 6, 7, 10,000 miles a year, then it's going to make more sense for you to depreciate it by price. Again, all of that should be a business vehicle that is used for business purposes only. For example, if you have a lawn company and you have to go to the house to cut the grass, you have to go to buy supplies from Home Depot or Lowe's, this is business expense. If you're a realtor and you have to drive customers to the property, or you have to go to the property to take pictures and list them, this is business expense. If you're a real estate investor like I am, and you have to drive to any real estate or any house, or you pass by houses along your way to wherever you're going, because you're a real estate investor, you're just looking at the road to see if there's any houses that you like. So that's a write-off, if you catch my drift. Any travel that you do, for example, tomorrow I go to Tennessee and I want to see real estate there, that's a business expense. That's a write-off on the mileage. That's also a write-off on the lodging, because I'm there to look for houses. But those little intricacies and tricks I'm gonna discuss in a future video. So to be perfectly honest, I intentionally made the video do not buy a new car or never buy a new car, and now I'm releasing a video reasons why you should buy a new car. And again, for personal use, I highly don't suggest any of you buy anything expensive and anything that is gonna take a lot of money or a lot of cash flow out of your pocket. Like I said, name of the game is cash flow. Now for business purposes, there's many different reasons to buy newer or brand new spanking new car, depending on the situation and on the business you're in, or brand new equipment on that matter. You don't need to buy old equipment. You can buy brand new equipment because it's a write-off. The reason why I do not suggest anyone buy expensive things in general, but car is a liability, so let's focus on that. Expensive liability for personal use is there's just no incentive to do so. You're just throwing money out the window. Yes, it is more reliable, which is something I didn't touch on last time. Newer car or new car is way more reliable than older car, but you paying that premium for more reliability, obviously. And I'm not saying buy a $1,000 car that doesn't even start. All the cars that I've bought so far for personal use were $5,000 and $5,500, and they have never left me on the road. A couple of times the battery died because I forgot the dome light, but that's just because I'm stupid. But other than that, I've had great experience with $5,000 range cars. So you don't need a $25,000 vehicle. But all in all I was trying to address is, if you use it for personal, do not spend extra money. If you want to buy something newer and it can intertwine with your business, definitely spend the extra money, but buy it for business purposes. The United States government gives you enough incentive to buy stuff for your business that you can write off, and this way they're stimulating new businesses or small businesses. And the whole reason behind this is very simple, and I'm not gonna go in detail, but just gonna mention a little bit. They know that the highest tax is being paid by the worker, and if I am a business owner, I need incentive to become a business owner. If they tax me regularly, why would I even bother to hire more people? That's more headache. Deal with customers, that's more headache. That's why they give me an incentive. I pay less taxes, but I employ other people. And the government knows the more people I employ, the more taxes they get. This is why Amazon and Tesla, when they opened their factories, states were actually fighting and outbidding themselves to offer them 10-year no tax credit or whatever it was. I don't know. I think Tesla got a 10-year no taxes in Nevada because they know they're going to employ 5, 10, 20,000 people. And those 5, 10, 20,000 people will pay 20, 30% tax. So that incentive is not because I'm so good looking. The incentive is there for a reason. With all that said, thank you very much for watching, guys. I hope you enjoyed the content. If you find anything of value here, please consider subscribing, leave a comment and a like. So far, thank you for the support. Hopefully we reach 40 subscribers by the end of the month. But all in all, to capitalize, if you have a business, do buy stuff under the business, because then you can use it as a write-off. For personal, try not to spend an insane amount of money for something that you just don't need. With all that said, guys, keep grinding and hustling every day. There is no shortcut to financial freedom and wealth building. See you next time. Can I keep your car like for one more day? Like, it's pretty cool. Like, can I just take a couple of pictures so I can post on Instagram? Thanks, man.